past performance is no indication of future success. And by the way, markets can drop significantly before the Fed actually can work its magic. Think back to what happened in March. Remember how far the markets dropped before they bottomed? So the same thing could happen again. Now, sure, if you just hold on throughout the whole ride and the Fed bails you out, well, there's no problem. Although there is a problem for people who are utilizing margin. There are a lot of traders out there who are buying these stocks on margin because they think stocks only go up. And then when they go down and they get a margin call, even if the stocks come back, they may no longer own them when they do. Because if you don't have the money to meet your call, your broker sells your stocks. And I have a feeling that even if the Fed does manage to resurrect the market, it's not going to resurrect all the traders who died because they had a margin call they couldn't meet. Of course, one of the only things worse than not meeting a margin call is meeting the margin call. Because what happens if you send more money into your account and then you get another margin call, right? Because the margin call, when you get your first margin call, that's a pretty good indication. On Twitter, he said that he didn't understand why getting snubbed by the S&P, why not being included in the S&P 500, why that was bad for Tesla. Of course, I went into exactly why it was bad on my podcast on Friday. It would have been great if he would have listened to it. I suggested that, but I explained on that podcast that the reason it was such a problem is because so many people had already bought Tesla on the anticipation that it would go into the S&P. And once it gets into the S&P, now you have all these index funds that are forced to buy it from the people who front ran the inclusion. So it was a buy the rumor, sell the fact, only there was no fact. There was just a rumor. And now they have to sell when it turns out that there is no fact and the rumor was false. But again, this is what happens when people who are not very experienced in trading start trading and they think they're a genius because they're making money, and they don't realize that they're making money because of the Fed. So think about that. That's a lot of risk. And if you look at the recent trading correlations, Bitcoin is far more positively correlated with the NASDAQ than it is to gold. Gold was down slightly today, but barely. And many of the gold stocks actually finished positive on the day, even as Bitcoin was down. But, a lot of people who are, again, inexperienced, novice people are in Bitcoin, and now they think, oh, there's a $10,000 support. I don't know. I mean, I mentioned on Friday that the support really was about 10,500 and it broke. And I mentioned the fact that the breaking of that number and the fact that Bitcoin spent so much time below 10,500. And in fact, it was at 10,600 when I recorded my last podcast. But the fact that it had spent so much time below what I regarded as support, to me, meant that it was no longer support. And I thought the next support line was around 10,000. And that's where we are. But that is not strong support. I don't look at that as being strong support at all.